Welcome to Daily Market Briefing. I'm your finance reporter, here with the market setup, sector rotation, and the headlines that matter before the next session.
Welcome to your Daily Market Briefing for 2026-03-30. The session turned on Powell sees inflation outlook in check. No need to hike rates because of oil shock. CNBC. With traders watching SPX negative 0.39% and leaning into strength from financials, software. Here is the broad market snapshot. S&P 500 down 0.39%, Nasdaq 100 down 0.78%, Dow Jones up 0.11%. Next, the ETF curve set shows where relative strength and weakness develop through the session. Leaders were financials plus 1.15%, software plus 0.95%. Laggards were technology, negative 1.86%, industrials, negative 1.63%. Across global markets, the session leaned constructive globally, with most major regions holding up. United States was one of the weakest pockets in the map, while Europe held up better than the rest. Stepping back, broad risk tone was soft, with SPX at negative 0.39% and NDX at negative 0.78%. Relative strength stayed with XLF, IGV, while XLK, XLI lagged the board. On the S&P 500 heat map, leaders were financials plus 1.15%, software plus 0.95%. Laggards were semiconductors, minus 4.23%, industrials, minus 1.63%. The market is still trading through the Fed lens, with investors using data points such as upcoming macro releases to refine expectations for the next policy move. If the incoming data runs hot, rate cut hopes could be pushed back and pressure duration-sensitive sectors. Commodity action was split. Crude oil led, while natural gas lagged, so the move looked selective rather than broad-based. The index board leaned lower, with Nikkei carrying the weakest tone and Dow holding up best. Mega cap curves were mostly negative, which points to a broad tone move more than a single name story. Forex showed a risk-off currency tone, with the sharpest move in GBP USD and the best relative strength in USD JPY. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mixed to lower, so rates still mattered for the session. The main focus stayed concentrated in financials and software. The pressure point remained semiconductors and industrials. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow through on Powell sees inflation outlook in check. No need to hike rates because of oil shock. CNBC also matters because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. Broad risk tone was soft, with SPX at minus 0.39% and NDX at minus 0.78%. Relative strength stayed with XLF, IGV, while XLK, XLI lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Today's finance headlines centered on Fed expectations stayed front and center. Here are the key points from the headline flow. It can shift rate cut expectations and change the tone for growth and duration trades.